So you want to renovate your kitchen, and maybe right now it's giving 1998 Olive Garden break room vibes, and you want it to look more like bright, modern, Pinterest-worthy. Totally fair. But here's the tiny little financial speed bump. Kitchen renovations can cost around $40,000 on average, which means unless you've got 40 grand hiding in your junk drawer next to dead batteries and one mysterious Allen wrench, you need a plan. And for big expenses like this, two common options are personal loan and home equity loan. Both can work, but they are very different financial animals. Let's break it down. I'm Alex Gettlin, and I've partnered with Achieve. They have helped thousands of people consolidate high-interest debt into one manageable payment. And they treat you like a real human being and not just a row in a spreadsheet. Let's get into it. Personal loan, home equity loan. What do they have in common? Both are usually installment loans. That means you borrow a lump sum up front and then pay it back with fixed monthly payments over time. One's chicken and vegetables, and the other is also chicken and vegetables, but your house is also somehow involved. Big difference number one, collateral. Here's the biggest difference. A home equity loan is secured by your home. That means your house is the collateral, which is basically a fancy way of saying, hey, the stakes are real here. If you stop making payments, the lender could foreclose. That's a real risk. A personal loan usually doesn't require collateral. Your house stays out of it. So no house keys on the table and no awkward Zillow-based tension. Difference number two, interest rates. Home equity loans usually have lower interest rates because they're backed by your home. Personal loans typically have higher interest rates because there's no collateral. So if you're borrowing a larger amount and can qualify, a home equity loan may save you money over time. But again, lower rate, higher stakes. It's kind of like getting a discount on a roller coaster where the safety bar is your mortgage. Big difference number three, how much you can borrow. Personal loans often go up to $50,000 depending on the lender and your credit. Home equity loans are typically much higher because they're based on how much equity you have in your home. And equity is the part of your home that you actually enjoy. Or as I call it, the only math that homeowners actually enjoy. Big difference number four, speed. Now, if speed matters, personal loan usually wins. Some lenders can fund a personal loan as fast as 24 hours after approval. That's fast. That's contractor texted me he can start tomorrow, and now I'm panic Googling tile fast. Home equity loans usually take longer. Think weeks, not days. There may be paperwork, an appraisal, more review. Think the full financial obstacle course. If you need money quickly, personal loan. But if you can wait and go the lower rate route, home equity loan might make more sense. Big difference number five, repayment terms. Personal loans usually have shorter repayment terms, usually 2 to 6 years. Home equity loans can stretch much longer, sometimes up to 30 years. Longer term means lower monthly payment, but it also means paying more interest over time. So don't just ask, can I afford the payment? Ask, how long do I want to be emotionally connected to this backsplash? So to recap, here's the quick breakdown. A home equity loan might make sense if you own your home, have solid equity, want a lower interest rate, need to borrow a larger amount, and can wait a few weeks. A personal loan might make sense if you need money faster, don't want to use your home as collateral, or borrowing a smaller amount, or just want a simpler process. Neither one is automatically better. It just depends on your budget, your timeline, your home equity, and your comfort level with risk. And if you want to compare both options for your actual situation, Achieve can help you look at the numbers. They offer personal loans up to $50,000 and home equity options like a fixed rate HELOC with terms that go up to 30 years. So instead of guessing, spiraling, and asking your group chat for loan advice from people who still split Netflix passwords, go to achieve.com and see what your options look like. Your kitchen won't renovate itself. Although if it did, I would absolutely finance that robot. Subscribe for more breakdowns like these.